I watched it put that money in my account.
Uh-huh.
And I got back flat. Here's what happens. When you are not in an account, they don't care what your P&L is, okay, your profit and loss, it don't matter. But the market term for I'm not in a trade is flat. When you're in a trade, you're not flat, you're either up or down. And as soon as you close that, you're back flat, meaning you have no action, basically. Mm-hmm. You're sitting at the poker table and they're dealing around you. You have nothing going. So, but here, so you got, okay, so you got, let me get back to the markets. Okay, so, so here is the NASDAQ. All right, we looked at the NASDAQ at the bottom. We had 1.2. We had 1.2 in the S&P. There's only 525,000 in the NASDAQ. Mm-hmm. But that's still plenty. You get in on the NASDAQ. But then you can go to something that's probably not trading as like in the agriculture or something like interest rates. See, you can trade anything. You can trade anything. That'll hook you up. You know what I mean? Mm-hmm. And so, see, here's like a 2-year T-note. Mm-hmm. Yeah, actually, there's $1,040,000. And then 5-year, there's $1,007,000. So I was wrong there. There's quite a bit of action there. But anyhow, the bottom line is you don't want to, especially if you trade options with whoever. If you get away from this and just say, I just want to trade options, you need an options table. When you pull up a table, it has all these information in it.
Here, I got it right here. So,
and you want to look at, you want to have on your chart volume tab and the O and I, open
you
interest.
wanted to trade this one. You said trade options. And you don't go long or short or whatever.
See, that is
Don't
nothing
matter.
like what I'm trying to talk
Oh,
about.
I know, but once you hit one of those in the side, then you get that, like you talking about.
Yeah, but see what happens is you won't. See, I don't know. I'm not seeing.
See, we just said long, so we're
Yeah, but
betting it's gonna go up.
That. No, I know why I wouldn't use Robinhood now, because a trade table should pull up exactly what. I'll show you mine.
Well, see, first you pick your week up here where you wanna go out
Yeah,
to.
but no, it's altogether different. What you show me is, you'll see, it's totally different. But when you go to a trade table, you get all these trades when you open up a certain date, like 2 weeks from now, we'll say, which you should never do. But let's say 2 weeks from now, then you get all these different strike prices that you can select whichever one you want, in the money, out of the money, or at the money. Any one you want, you can select that, and you can say, where is that at? Is it, first of all, a delta of at least 70?
Right here, here's your price
I
in the
know.
middle, so this is below out of the money.
Yeah, that ain't doing nothing.
That'll help you.
I'm telling you, you wouldn't have me on that 15 minutes. I said, I ain't for me. Because there's not good information there. That's a great thing for beginners though. I mean, every beginner starts there and
It shows you break even and all that.
yeah, well, it does the same thing, but it's much thorough more things. And you need to learn these things, not just clicking something because you think it's going to go up. But in an options market, you're looking for volume and open interest. You can have the volume, but you couldn't have the open interest was low. And then you need to be at like a delta 70 or better, because a delta is for every dollar. If you got a 70 delta, every dollar the market goes up, you get 70 cents. If you had a 30 delta, every dollar it goes up, if you're long, you only get 30 cents per dollar. So which one would you rather have, a 70 delta or a 30? Right. There you go. And you, again, are not going to have a whole lot of open interest down there. But people who are playing the long game, which have already been in this thing for months, they're still in the game. That's all that open interest and volume. It's already in there. This is not just today, everybody getting in today. That's all that's in there, mixed in there. And it could be from 6 months ago, it could be from a year ago. This now open interest. That's why your delta's going up and down, up and down. And so, but anyhow, what happens is you can have volume but not have open interest. But when you trade this 95% of the day of traders like us are trading day trading. This thing trades 6 days a week, 23 hours a day. You can trade it just about any time. The only time you can't trade it is between 5 p.m. and 6 p.m. Eastern Standard Time. Okay? If you're in there, if you're in a futures trade and you're showing that you could be up $1,000, and 5 o'clock to 6 o'clock, they do settlements. They settle the daily thing. Hey, you know, everybody gets squares up the numbers. So the numbers shuffle, they square back up. Now, when it comes back online at 5 o'clock, you look at your trade, you don't know that all your $1,000 is evaporated. Because you don't know. It's not showing you nothing. It's closed. Door's closed. When it opens up at 5 o'clock, you look and see your P&L is $14. You go, what? Well, it could be $12.50. That's the lowest tick. But you say, man, I just lost $900 just because I didn't get out in time. Get out in time. Because
Before they square up.
yeah, because then they may square up and you may go beat more. But that's also like taking your chance with announcements and stuff like that, right? So, yeah. But I'm not doing this thing in any kind of organized thing. Well, I just want to tell y'all that, first of all, here's, I guess, the thing out of this lesson right here. I'd love to see this when it's all said and done. Lord, help me. Because this is Pat jumping all around like this. And this is not a good way to teach. Don't plan whatsoever, just wing it. But this may be a good YouTuber. He might get 1 million views. Ooh, is that crazy? What's he? We know how not to trade. but he sure got us figured it out. We don't do his way. But anyhow, so what happens is, so you got this, realize that these are quarterly contracts. They last, and the month is that we're in now is U, which is September. And then December will be Z. So we don't have to worry about doing that right now, but.
You're over there on that screen.
Where, over here?
They're hanging in front of you, or in this place over here.
Was I over there, right?
Yeah, you can get over there. Just run out to the left of your screen.
Yeah. But this would be like, whoa. Yeah, but anyhow, so that's kind of a thing about the CME. And CME is basically Chicago Mercantile. There is one in Atlanta called ICE. They handle certain things that the CME does not handle. I don't know what it is, but it's you have to pay. See this, I get from here. I pay for any much $5 a month. Something I pay for updated data. So when I'm looking at
Research.
no, when I'm looking at candles,
Yeah.
I'm on time. And if you get into TradingView and you
Real
say-
time.
real time, and if you're doing TradingView and you just do the freebie, it's delayed data, and it may be 5-10 minutes. But so what? You're just learning. It'd be nice if you knew what was fixing to happen, but you're not going to know because you're delayed. And you have to get that, you have to pay for that, but it's not that much. Anything that you pay for in this thing is usually worthwhile when it comes to stuff like data and everything. Just joining some kind of guy's thing to follow him and all that, I don't know about that. That may be good, it may not be. I don't think so. I think it's mostly I'm gonna try to get more views on YouTube or wherever. But there, don't get me wrong, there's good information on there. But everybody, the bottom line is join me and send me $35 a month or $79, and it's gonna go up to $800 a year, and then we'll give you a special deal for 4,000 a year, you know, they just hustling. So the best thing to do is just trade, and get as many trades with paper money. I didn't do that, because you know what I used to tell people? They said, well, I'm trading paper money. I said, I used to shoot 9-ball, and people would come up to me and say, man, how do you learn to play as good as you do? And I'd say, lose a lot of money. So I thought that same thing about this. If I'm gonna learn how to do it, I'm gonna lose money.
No skin in
And
the
the
game.
more I lose, the meaner I'm gonna get and the harder I'm gonna work. Because I don't like losing money. So don't do like me, paper trade. But don't get stuck on paper trading and say, I'm not ready, because I had 3 wins yesterday and 4 losses today, I'm not ready. Yeah, you are. You can do this right here, 1/10 of what I was looking at right there. You can go in here, and I'll show you what it is. It's called, let me go back to the products.
So when you say not paper money, you talk about on margin?
Price, no, it's actually monopoly money.
You're not playing the
Making
real money.
trades, you're making trades, and they're actually, they're
They just
fulfilled.
can't.
You,
Yeah.
and it's.
You can see what happens
You
and
can
all
look and
that.
see, you got your count, you go down and look, you got $1 million in it. Look, I only got 980,000, I lost $20,000, and it's gonna tell you exactly how you did it. You keep up with it, make them think, how did I do this? But if you got a system, let me look and see if the only thing about this thing, I mean, this CME is, I don't know how to manipulate around in it, but because sometimes when you first pull it up, it gives you this. That's what I'm looking for. But right here, if you look, this is equities, and that's the E-mini, ESU5, right? There it is. All right, now watch this. Micro futures. Remember, all right, let's go back here. Remember when I said that's $50 a point, $12.50 a quarter of a tick. All right, watch this. I go here, if I can get the map. I go here. And I go to, look, see what it says? The other one said ESU5, this one says MESU5. All right, so now let's see what this one does. And this is 6,302 times 50, the last one was, right? Which was 300,000. All right, watch this. What? All right, this one is $5 instead of 50. It's $5 times 500. So $5 times 6,305 is 30,000 instead of 300,000. Now your margin that you was having to pay, let's look for the margin on this. Margins, remember how much that margin was? $21,000 on that other? This is $2,000, and that's from them. Your TD Ameritrade or whomever you got, it's only going to be $400, $500, $600. See, like that trade obey I was telling you about, it's $50. Whereas the other was $500, this was $50. All you have to have $50 in your account. And they'll let you take that trade.
That's crazy.
It is. And I wouldn't do it.
Spell that trade O.
We're going to look at TRAVEOVATE. Trade Ovate, I believe. Trade Ovate.
TRAVE.
VATE, Vate. Trade Ovate. And
Is it
it's
O?
on Ninja Trader bought them. And Ninja Trader's a big player. But Ninja Trader charges you like $75 a month to get in their game. To get all their data and blah, 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 blah.
Trade, the word trade. O.
All one word.
VAT.
Trade Ovate. All right, let's see.
And that's low,
TRADEOVATE, enter. All right, here it is right here, see it? All right. So this is the platform.
That's what you used to seeing?
Well, no. I'm going to, I said, not yet, I'm going to. I do not have an account with it. My accounts are with Tasty Trade, which has not got paper money. you have to go full blown, but that's where I do options and I do futures on Trade Station. And both of them they have higher margins, but let me just look at the trading margins. Okay, look right here, it's margins. All right, for Bitcoin, it's $50. To do a Bitcoin, big Bitcoin, nano Bitcoin, that's a little Bitcoin. Then you get down here, here's the E-mini. What happened to my margin? E-mini. Oh, that's ECS, I don't know what that is. But here it is. All right, ES, right here, ES, $500. It was $23,000. They're letting you have it for $500. They're letting you make that trade. That's the big boy trade there. That's where you get, we talking about, you trade right, you make thousands of dollars. But you don't want to start there. You want to start right here with a micro, which would be an MES. If I can find it. Wait, what's in? I guess the micro probably is. See, you can trade in futures. You can trade Forex. You trade here's an Australia. See, down all these are just the U.S. This is the U.S. dollar against the Australian dollar. U.S. dollar gets the British pound. U.S. gets Canadian. U.S. gets Euro FX. The yen. That's a really good. U.S. yen. And see, the thing about it is, the euro, wherever the euro's at, if it's here, the U.S. is here. They correlate opposite. The euro's up. If the euro's up, dollar's down. Dollar's up, euro's down. So all you do is, let me tell you, I played golf 35 years ago with a dude, and he and his wife joined us. They put him with us. And I said, hey man, so you live? We went by. Fantastic home. He's probably maybe 28, 30 years old. We go and I said, you live there? He said, yeah. I said, dude, what are you, a dentist? He said, no, man. And I said, your wife's a dentist. He said, no. And I said, well, you sell drugs? He said, no, I'm going to do that. I said, what do you do to have that kind of house and then just be out here playing golf in the middle of the day? He said, well, my work starts 3 o'clock in the morning. I said, what are you doing at 3 o'clock? He said, I'm trading money. And
Currencies?
Currency. Yeah, Forex, foreign exchange. He said, I'm a currency trader. And I said, yeah, and this is way before we had maybe 25, 30 years ago. So he was on the phone 3 o'clock in the morning. And, and he was already that young and living like a king. And I often thought about him. I never saw him again. Or if I did, I didn't remember. And I thought, how rich did that dude get? Because he was killing it a long time. And Forex, the largest ever trade ever in any market is in the Forex. You know how much $1 trillion is?
Yes, 1,000 billion.
Okay, let me tell you what a trillion.
A million.
You know what? If you was going to spend $1 billion at 1,000 a day, how long would it take?
You couldn't do it.
No, you couldn't. And I guarantee you, if you started when Jesus Christ was born, you'd still be spending it and have 700 more years to go. It takes 2,700 years to spend $1 billion at 1,000 a day. Now, if you take $1 trillion and you take, this was Reagan a long time ago, he was talking about $1 trillion. We're fixing to go to that kind of, we're going to start spending that kind of money here in America. He said $1 trillion, if you took $1,000 bills and laid them, brand new $1,000 bills and stacked them, $1 million would be 4 inches high. He said $1 trillion is 65 miles high. And I went, ain't no way. I went, wrong, Ronnie. It's 65 and a half miles. What's a half a mile every 4 inches $1 million? I mean, come on.
Wow.
That's how much a trillion is. And there is $6 trillion today going to be spent in the Forex market. Every day. $6 trillion. That's the market. The biggest trade was ever made, George Soros, over $5 billion in one trade. But he knew the Swiss franc was going, he was inside.
Yeah,
And he knew it was fixing to fail. And it was, if I would have had time, we could go back and look, and it's like that, it goes, "Choo!" This was in 92 or something, and it dropped that much. And he had shorted it. But anyhow, so this is trade debate, anyhow, so I'm giving you a little bit of information about how this thing works, and you gotta trade you gotta move your, and I guarantee you, if you don't, you would be sorry, because you could still trade. Once the front month and the back month, literally it's the next month. This sounds stupid, but the back month is the next month. I don't know why I didn't say it. They kind of back month would be like the one we just got done with to me. But it's called the back month. So when you get here, and it actually closes that, look right here, let me show you. Okay, look, there is no March. There's not one on there, right?
Well,
It says, you going to work?
At 6.
Huh?
At 6.
For
For a friend.
But look, see, I was coming. If you ain't gotten squared away in that thing, you just got flat. And wherever you was at, that's where you left, you got left. So you can trade these, but you just there ain't no value there. You can get in and never get out. So you gotta stay in the front month, that's what it's called. We're in the front month now. But in this case, you're actually in the front quarter. But they call it the front month, so.
the early action.
Yeah, so we three things into that. All right, so now let me just get back to that, I keep losing my bear. Oh, there he is. But, so you got an idea about this, right? And if you was gonna trade, you can trade the micro, and when you close the deal, the $12.50 per tick is only $1.25 per contract. You get 3 contracts, it's $3.75. And so you could just do one contract, that's $1.25. You could risk $40 to make $120, and $40, and it ain't the end of the world. If that's the end of the world, you don't need to be trading. You need to find a better job. But so anyhow, what happens? See, here's an open interest, 156,909. That is not. That's contracts. Multiply that by 100. So that's 160,000 contracts, and it's 716, whatever. So I'll go right here, let me go back here, and I'm going to try and show you something, then I'm going to show you how I found it. But here's what we got, right? Remember I said that if I had, look, if I picked this, okay, when I was looking at this thing, this had already happened, okay? Right here, this had already happened. So I go back and I start looking, what happened overnight? So if you'll look on here, you'll see that I've made some lines, I'm sure. I made a line, see that yellow line? That's going to probably be, let me get the Globex on here so I'll find out where I'm at. All right, here's, okay, so yesterday, this Globex, that's overnight. This happened from 4 o'clock, if I line up, that's 4 o'clock. I mean, this is 9:30, this is 4 o'clock. Okay? So what I did is look at that red line right there. See it? The red line here?
Yeah.
And then what I did, I don't know why, I always do, but I didn't today, is I marked that high right there. I guarantee you, while I was messing around, I pulled this down. So what I'm doing is basically I'm saying the high of yesterday's trading season, the market actually being on, that was the high, and this line down here was the low. See how I put that in there? All right, so I'm saying that the reason I mark them off is usually that it will try to, it'll either stay in between them, or once it breaks the low or the high, then you can pretty much figure it's gonna go higher. If it breaks the low, it's probably gonna go lower. But it only does that like 12 to 1 o'clock. I just get out, because there's no telling what's gonna happen. But meanwhile, see this thing right here, when I was right here, this wasn't on the thing. So I went back and I found this, and I'm gonna tell you how I found that. But I found this, and I wrapped those green lines around it, right? Right here?
Yeah.
All right. So what I did was, if going along here when it first opened, it touched down there, and it would have took you right out, right? Right in here. Is that going on? Okay. See right in here? So this is 9 o'clock. Well, that's, no, I'm on an hour. Let me go back here, 30 minutes. Let me go back to 5 minutes. Okay. So what happens is when the market first opened right here, it goes down there and it hits this demand. And so I could have got in the market right here. Look at that. See that line? And I told you, rookies, this is a great way for someone, until you get used to it, that's a great way. Take this RSI, and once this thing hits a point, once it crosses this middle line, which is a 14 moving average, once it crosses that, and I put this on there too, I'm going to show y'all this thing. Once I put this on here, and look right here, see that cross? See right here, the green line crossing that red one?
Mm-hmm.
Once those two match up, it's going down. No questions about it. So you could grab right here and just say, boom, go right here and look, say, look, hit that plus sign, market order. I'm gonna sell one contract, and you can set up. I'll show you how to set it up. You set it up for 5 contracts. While you're playing around, might as well see bigger money than. But it gets your hopes up, you know. But anyhow, so if you didn't, I could just get rid of that. But anyhow, what happens is, so anyhow, if I wanted to sell, I could have sold that and rolled it down there. And once it started turning back, which was right
Right there, yeah.
yeah, right in there, I could just got out. Well, that right there is 302 down to 62.85. That's 15, 20 points. That's $1,000. And that's in 5, 10, 15, 20, 25 minutes. You could just close it. One click, you're out. That's $1,000. Now, you still got to do this. Once this thing now turns, the trend is your friend until the bend in the end. Okay? So you stay with the trend. Even though there's a lot of this going on in here, this thing is going down. Once it crosses right here, did this one cross?
Yes.
Yes, it crossed. All right, I might jump in that one. Probably wouldn't, because I can see there's just too much clutter in here, and I'm going to explain that to you too. This is way too much. This is range brown. This is just the Crips and the Bloods. They fighting it out. Can't either one of them. Or the Germans and Americans, whatever you want to call them. But anyhow, so here's what happens. Okay, so if I get in this thing and I set this and forget it and go to play the golf, see, what it got me in, would have run me all the way up there. If I'd have been here, I could have got out. You know, once I saw this bend right here, I said, look, this thing's supposed to go down, I'm gonna get out. But if I was at the golf course, guess what? I just got stopped out, because my stop's gonna be about right there where that red line is. Actually, I put my stop right underneath that little demand zone right there. So I'd have got stopped out way, long ways. So I'd have lost my, let's say I risk $400. I lost $400 when I was playing golf. But if I had been here, I could have said, well, I'll just make 500, because that's probably about, this was 1,000, that's 600. But that's sitting here, and that's how I usually trade in the mornings. I sit here with my hand on the trigger. Okay, because my platform, Taste Trade, I got one click. Well, what I do there is I'll pick on it. alt for a buy, and or control for a buy, alt for a sell when I go short. And to be honest with you, I go short. I make more money shorting than I have buying. And shorting is, to explain how shorting works, buying is if you were going to buy a stock that costs $10, and you said I'm going to buy 10 shares. In your account, you have to have $100, okay, at least to buy that stock. And they're going to hold back that $100 and issue you 10 shares. All right. And if you get, once you got them 10 shares, you can sell them. You can sell 2, you can sell 4, you can sell whatever you want. They're yours. But if you short, what you do is you borrow the stock from the market. Okay?
Oh, shit.
Yeah, you borrow the stock from the market. So if the stock is $10, you borrowing it when it's at 10. And you sell it back to them when it gets to 7, and then they pay you back that $3 difference. So you make $30 when it goes to 7 because you said it was going to go to 7. And so you don't buy it, you borrow it and put it in a little side cabinet so that you can sell it back to for 10 when it's at 7. You keep the $3. So it's kind of, people say, how in the world can you short something you don't even own? When you buy stock, you actually buy the stock, it's yours. But when you short it, you're just borrowing it. You don't have no stock, because if you do, you certainly don't want to buy it at 10 and then sell it at 7 and just get $70 and I'm out $30. No, I want to sell it back. I want to sell it then for 10 when I bought it for 7. When I actually buy it, I'm going to buy it for 7. But then I'm going to sell it because it's now where I originally made the contract at 10.
You borrowed it and they agreed to $10. And then when you short it, if it goes down, then when you get to buy it for that where it goes to.
That's exactly
But
right.
it's worth.
It's worth $100, and I buy it for 70. I keep 30.
Right.
Okay. Now, so anyhow, so what happens is, and you always, I'll get around to it, but you always make sure you always put a stop in. Okay, like if I did this platform, which y'all should use this so if I did this right here, watch. I set this thing up, and we'll show you how to do that, but I set this thing up on one click. Now I can go down here and say, look, this right here, this trade, I get that trade, it gives me an order ticket. And I can go in here, right in here, and I can say, the price is $62.98, ask, I'm trying to buy. Ask and bid, okay? When I'm asking, there's like, let's just say like an option, get back to options. In options, you got to ask and a bid. And you got it on both sides. You got a long and you got a call. I mean, you got a call and you got a put. What does a call do? Don't show me that anymore. What does a call do?
The call is
Buy.
when you're going longer. Yeah.
Okay. What happens when you do a put?
You borrow.
No. What happens when you do a put? Is that a short or a long?
It's going down.
Okay. So a put is a short. A call is a long.
Yeah.
But guess what? A long can be a sell or a buy. A put can be a sell or a buy. Why would I do that? Why? If I bought a call, I was expecting the market to go up. If I sell a call, I'm expecting the market to go down. If I buy a put, I'm expecting the market to go down. If I sell a put, I'm expecting the market to go up. Now, why is that? Why would they have a buy and a sell on both sides, on the call side and on the, because of implied volatility. Implied volatility is high. The premium, I want to be a seller when the implied volatility is high. When the implied volatility is low, I want to be a buyer. I want to buy low and sell high. So that's why on both sides of the strike price, I have a buy and a sell. And I only base that based on implied volatility. There's so many professional traders that's all they use, implied volatility. Because And applied volatility is like a lot like this thing called a Globex. It stretches out, and guess what? It's gonna spring back. So when the applied volatility is real high, it's gonna pop back. It's like a rubber band that got too tight, and it's gonna pop back. And it's the same way. And there's, like I said, I just use that as examples. But again, the options it takes a long time to learn options. I thought that was a pigeon or dove or something. It's a white seashell in it. On the banister out there.
That was,
Oh, okay.
It's seashell.
that was the hardest part.
What?
For me to learn on that Series 7 test was calls and puts and up and down,
Yeah,
what all that means.
yeah.
And I-
But see see, I just put that in there, and this is a quick one. If this thing were to come down here, and I got a buy in here,
Mhm.
if it comes down there, that's gonna change from limit to, it's gonna start flashing money. This is my stop loss. See, it's connected,
Well, that ain't that easy.
see, it's connected to
So that's how
that.
you create your band that you operate.
Well,
with.
it's called a bracket. Then here's the top target. I just take the target up like that. Now see how they're attached together? That means if any one of them, this is right here, this right here, I'm in, this is a sell to close, this is a sell or actually that's a buy to close, this is a sell to close. This is a market, this is a limit. The difference between a limit and a market is limit, the stock's $10. And it's up to 12 bucks, we'll say, and I say, I wanna buy it when it gets to $10. Or I can buy it at 12, I can just say, I wanna make a market buy. Then it's gonna give me the best price right leaning. So that might be $11.98.
That's immediate.
So that would be a market. If I said, I'm gonna put this order in, and I'm gonna just go downtown, just a limit order, I just wanna buy 10 shares, I just want 10 shares of stocks, Microsoft. So I got the money to back it up in my account, so I can just put in, I wanna buy it when it gets to $10. I don't wanna pay $12 for it. I don't care, I don't like that price, I like the price of $10. So I put in 10, that's a limit. So when it works its way down and it gets to 10, it's order filled. I own 10 shares. But now if I was wanting to say that I'm gonna actually wait and it's gonna hit that, and then I think after it hits this, it's gonna go up, then I would put a target up in there to sell it, and it would bracket it. But meanwhile, if I just put just the thing in there, it's just gonna go with the flow. As long as I got that order and I don't close that order. If I close that order, I own the stock. But if I leave it on, I'm subject to whatever, I'm subject to the wind. If that makes any sense. I know I'm getting all out of order, but I ain't never done this, so. But, here's what I'm gonna do now. But I'm gonna eventually get done with this. But I circle this thing right here, right? But if you look up here, I also did a pink one. And I had to go way back over here. Now I did this morning, just playing around, because I thought, if I'm gonna go up there and show them how to do this, I gotta know myself, because I ain't never really, I've done it a couple times, you know. And I went back in 22 and 23, I did a couple of them, just, I guess, screwing around. Because I go right here to this, I went to trader, or paper trading, and I went and I looked, and I went to the history and all that, but anyhow. So I went back here and look what somehow or another, I figured that there was something there. Let me get rid of this. Why do you think that I said something was right there?
Probably based on what's to the left of it.
No. It's actually based on what's to the right of it. But why, the question would be, let me close this thing. The question would be, why, Pat, would you go there and think that's a good spot? Why not right here? Or this looks like this is a little bend, why not here? See that green line? I'm going to show you something. Watch this. When I looked at that this morning, I was right here around 9 o'clock. This had already been hit. See it? 9 o'clock. So basically, there was a supply there. The buyers And the sellers, when they were fighting in here, and they decided the sellers won, they left orders there. But because it's a lot of candles in there, they didn't want a lot. But they left some. So basically, I don't think you're gonna come back where there ain't no t-shirts left in the store. How you gonna buy t-shirts? And I ain't hardly got none left. I ain't got 3 or 4 left. So I'm saying, when you wanna go up and get some real supply, that's the next place the supply's at right there. Okay? So here's the supply. And what happens during the day, look, I should say it didn't hit it. Look, it's hit it. I'm in that order. I lost in this one because I went to the golf course, but I put this one on too, and guess what? I'm gonna make this back that I lost here, because the only thing I lost here was $100. I didn't lose way down here. I stopped out right there. Because when I put this order on, I'd have bracketed it, just like I just did that other. I'd have put this one on as a short. That's why it's pink and this one's green, or red green. I just do that. Got red is supply, green is demand. So right now, if you was to look at this, after what I just said, where is the demand in this little thing? Where would the demand be here? And if you, when I first started looking at this, I would have said, I know where the demand's at, I know where it's at, but